Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the Vice President or VP, John Ripplinger from Imaflex. Imaflex trades on the TSX Venture Exchange under the symbol IFX and on the OTC under IFLXF. The company is currently trading at $1.23 with roughly 51.5 million shares outstanding, or about a $63.5 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks a lot, Trevor. Yeah, John, great to have you back. It's been a little while since we've seen each other. Well, it's been quite a while, actually. But super to have you back to sort of update us on Imaflex. And I know you've got a presentation. We're starting at the front page. I'm just going to hand it over to you and let you have at it.
Well, that's great, Paul. Thank you very much, guys, for organizing today's event. And thank you to everybody that's participating on the call today. So what I wanted to do, there's a number of people that have probably heard the Imaflex story, shall we call it, in the past. So what I'm going to do today is for those that may not have heard about Imaflex, I will give you the elevator speech, so to speak, of the company, looking at it high level. And then we're going to jump into some of the news stories that have come about since I've last spoken with you. For example, last week, we announced the $10 million purchase of new equipment for the company, which increases our production capacity by 20%. So that's a pretty material event for the company. So we'll look at that. And then I'm also going to give you an update on Advacil, that next generation agricultural film that we have. We have experienced some delays on that front, I have to be honest, right up front. But I'll give you an update where we stand with that. And we're almost near the finish line for Advacil as well. So just before we start, I'll just mention to you the usuals on the safe harbor passage. And basically, just please keep in mind that today's comments may contain forward-looking statements, and I encourage you to read the safe harbor passage, obviously, in the presentation before you, and it also will be posted on the website following today's events. So what does Imaflex do? Well, we manufacture and sell products for the flexible packaging and the agricultural space. You can't go into any food store, drugstore, etc., without seeing some form of flexible packaging, and we play a large role in that. We're actually one of the top 100 film manufacturers in North America, and it's largely to the food industry. About 50% of our product goes to the food industry, so it's somewhat recession resistant. Now, the company started back in 1994 by 3 individuals, and those guys are still with the company to this day, and they bring in-depth experience in extrusion, which is the making of plastics, as well as in converting, which is the printing and bag making side of things. Now we have 3 manufacturing facilities, 2 of those being in Quebec and 1 in Thomasville, North Carolina. We have about 230 employees, and revenues for 2021 were $107 million. We also have a very attractive financial profile. I just want to go off track for 1 second and just throw up this slide for you all to take a peek at. That's our last 2 years and our financial performance. So on the left side, you've got one column there, fiscal year 20, the year-over-year variances versus 2019. Fiscal year 2021, you've got the year-over-year variance versus 2020. And as you can see, both top line, bottom line, we have seen some nice improvement in the company's fundamentals over the past few years. In 2021, we had $8.4 million of net income, 17 cents per share of earnings, and we had $8.5 million of cash at the end of 2021, up from $3.2 million at the end of 2020. So that's another 17 cents that you've got from the cash alone. In terms of debt, we have very little debt. In fact, we have net debt of around $1.1 million, and that's net of leases, which you're having to include now because of IFRS. If you exclude that, we're actually in a cash positive position. Thus, the announcement that we gave last week about the additional equipment purchases. We're seeing some good things. We've indicated that we believe that we are at the early stages of a multi-year build out for the company. And this is, I want to just get up front, So you see the numbers are looking pretty respectable in our opinion anyway. Let's just jump back on and see what the company's about a bit more. So primarily what we manufacture then is polyethylene film for converters. Converters are like printers. They take our product and they make a finished good. It could be bread bags, soil bags, wood chip bags, etc. Now, as I mentioned, we primarily serve the food industry. So those are your frozen foods, your pet foods, your meat products, dairy products, fruits, vegetables, all that packaging that you need to have for those types of foods. And in fact, in 2020, we received from both the governments of Canada and the US government indicating that we were essential vendors and we were mandated to stay open during the COVID times. Although some companies were told they had to close their doors, we were mandated to stay open because of the fact that we protect and preserve food, and we remained open throughout the period. Now, we also make compostable products and metallized films. On the compostable side, we make films from basically chemically modified resins, or else from polylactic acid, which is plant-based sources. So we can offer those type of compostable products to our clientele. It has not been a big seller to this date, but we have a staff of chemical engineers and a chemist on hand. We are working with companies such as BASF. We are working with our customers, and as demand increases, we will be ready to offer more and more products on the compostable side of the spectrum. Now, some of you may ask, well, why are you not selling more of them? It comes down to costs. It costs more for us to produce. The buyer of our products has to basically pay more for the product then, and then he has to translate and put that onto the end consumer, which is us. And are we willing to spend an extra 40 cents or whatever for a particular packaging, whatever it would be, to get a compostable product? So that's why it's been like that to date, but things will change. We're seeing that in Europe, and we're ready for the change as it comes through in Canada as well. Now, we also take the waste that we have in the manufacturing process, and we keep that in the cycle, so to speak, by making industrial products. So we make garbage bags, bags and rolls, Gaylord bags, using the waste that we have throughout that process. We've got basically a very cheap raw material, and we can turn around and sell that for a nice margin to the end customer. In addition, in the United States, we've got integrated converting operations. So that's everything from the extrusion to the printing and the bag making. So we're able to offer a much more value-added product to our end customer in the US. Now, in terms of the agricultural segment, we offer the full spectrum of mulch films, your traditional mulch films for weed control, basically increasing water retention, reducing soil erosion, your barrier films for pre-plant soil fumigation to reduce nuisance odors, stop evaporation, compostable films, and metallized films as well. Now, we've gone over this in past presentations, so I'll leave it at that. But just to mention, we do have the full spectrum there. And in fact, in 2021, we actually received from New World Report an award for having some of the best films in North America, including the ones that are under development, Advacil, and the metallized films. Looking at the next slide, the flexible packaging market is one of the markets, therefore, that we serve, mulch film market being the other. On the flexible packaging side, it's about a $30 billion market, growing around 3% annually. As I mentioned, we serve primarily the food industry, so it's resilient to economic downturns, as well as I mentioned earlier, we're in the top 100 film and sheet manufacturers in North America. Now, in the mulch film market, it's a $3.7 billion market, but a much larger market when you include the crop protection products that are currently being applied through fumigation. That product, Advacil, which we'll be looking at in just a moment, addresses that market as well. So it plays in a much bigger sandbox than the $3.7 billion global mulch film market. Now, the mulch film market growing at around 5.5%, so respectable growth on a year-over-year basis. And again, here, as I mentioned, we've been recognized as a leader in the space for some of those metallized films and also for the Advacil product that we have under development. Now, in terms of opportunities, this is where I want to get into some of the new things that's going on within the company. We've got two things. Within the flexible packaging space, we have said over the past few quarters that we want to grow either organically or through small tuck-in acquisitions that make sense in terms of size, fit, ease of integration. And last week's announcement goes just on that point, increase our production capacity and capabilities. Last week's announcement increases our basically our production capacity by 20% and increases our capabilities. Basically, it doubles the multi-layer film extruders that we have. So that's a nice material change for the business. On the mulch film side, it's Advacil, which is the possible game changer for us. We'll look at both those things right now. So on the flexible packaging side, just to put things into perspective, as I mentioned, we've seen significant business strength in recent years. We've had good growth across all of our geographies, both the US and Canada. We've become a cash generator, and we're in a strong position to build out the business. In turn, in recent years, we have purchased new equipment, including a 5-layer extruder that went live in 2020. We are now reaching full utilization for that extruder. We've actually had to turn away some orders. And so we know that within the next year, we've got to start having additional extruders to meet those new demands that are coming in, those ongoing demands that we're seeing, and to be able to drive revenue and margin expansion. And that's why we announced the additional extruder purchase last week. Now, separately, I should mention as well, we've also been upgrading all of our major extrusion lines over the past few years. So we've been spending about $2 million per year to improve production speeds, to improve film quality, to improve the cost savings that we can generate from these extruders. And all this adds up to good things that we're seeing in the business. And I should also say, by improving the film quality, we are able to also pass that along to the end customer, who in turn, when they run on our films on their equipment, they can also run it at faster speeds and be able to offer their customers as well a higher end product because of the new capabilities that we have with the advanced extruders that we purchased in recent years. Now, looking at the new extruders, I mentioned to you, it increases our capacity by about 20% overall. That's about 12 to 15 million pounds of additional capacity annually. We have about 68 million pounds right now. Our utilization levels are, we've got about 10 million of that 68 left. And so it's time to start looking at purchasing new equipment. It also will allow us to increase our higher margin offerings. As I mentioned to you, we have about 24 or so extruders. 3 of those would be the multi-layer extruders. This basically doubles the multi-layer extruder offerings that we have and will allow us to increase the higher margin products that we've been seeing that have been contributing to the good results that we've had over the past couple of years. Now, it has less than a 3-year payback, and once they're fully operational, there'll be 18 months to become fully utilized, our expectations are. Now, the extruders will be shipped over varying periods between now and Q2 2023. The first one will be shipped to Montreal in Q3 of this year. So you'll start to see the impact of that, all being well, in Q4 of 2022. Now, we've got shipping issues going on right now. So barring any shipping issues, we should have that up and running in Q4 of this year. As well, I've been getting calls the past few days just with respect to the capacity that we have at the plant. Do we have space available? I just want to make sure that we're clear. No additional funds are required to add additional space, build out the plants. We can accommodate the plants. We're putting some extruders in Canada at our Victoriaville plant and in the US as well. Now, in terms of the loan, we have access to a $10 million loan to be able to finance this. As you saw, we have $8.5 million of cash, but we've also got this financing available to us. And depending on when we receive the extruder, the loan will kick in. So it's when the extruder gets shipped, the loan will kick in, should we so choose. And then you have 60 equal monthly payments from there to pay back for the extruder that you've got on hand. Now, if we were to take out a loan today, it would be about 4.9%. Now, those rates will vary depending on the timing that we take the actual loan out. Turning to Advacil, that's that disruptive technology that's been designed to replace basically chemical fumigation. So what's happening right now today, just to put things in perspective, growers will come along and they will fumigate the land with chemicals. So nematicides to kill the insects, fungicides to kill the fungi, herbicides to kill the weeds. And this is subject to overdosing, underdosing, requires protective gear, requires you to have plastic on the ground as well, keep those nuisance odors in the ground to keep the evaporation from occurring. And so it's expensive, it's environmentally unfriendly, and we believe that a new approach is necessary. And this is what Advacil is all about. So what we do with Advacil is non-volatile crop protection products. So those nematicides, fungicides, and herbicides are basically coated on the mulch film. That mulch film is then taken and is placed on the soil. What happens then is the moisture rises from the soil, it hits the film, and it activates the release of those chemicals into the soil. I'm not sure if any of you have left plastic bags in your back lawn and then lifted it up, you'll see the moisture that builds on that. That's exactly what happens here. The moisture hits it, releases the chemicals, they come out, the film is safe to handle, transport, and apply. It meets the demand for sustainable farming, it increases productivity, decreases costs, and is good for the environment. In fact, in the studies that we did, I'll be talking about that in just a moment, you were using 660 pounds per acre of chemicals using the best Florida grower standard for tomato production. Ours would reduce that by over 95%. If you just take the 95%, that's 33 pounds of chemicals rather than the 660 pounds of chemicals. So a huge reduction in chemicals being used and a good savings for the grower as well, of course. So really a win-win for all. Now, we've conducted 2 trials. It's sort of like you're a mini biotech, you're in stage 3 clinical trials. We've finished the stage 3. We're ready to submit, in our case, to the EPA, not the FDA, but the EPA. And those trials that we completed, one was done in 2020, the other one in 2021. The one in 2020 was basically designed to test, are the chemicals being released into the soil? Is the land being basically disinfested as you wanted to see? And was a plant growth yield and quality equal to the best Florida grower standard? And here again, we were shown that it was an effective fumigant replacement, that the plant growth yield quality was there, that the land was getting disinfected as we wished. And so we went ahead with the release study, which was completed just last year. And that was to determine that we are respecting what we call the pre-harvest interval that is put forth by the US EPA. And that basically means when you put that film on the ground and those chemicals go into the soil, you have a lag time between the time the chemicals enter the soil and when that crop is picked for safe human consumption. And here again, what we found is that the interval between the entry of the chemicals in the soil and when we picked the crop, it was adequate in terms of the release times. We met that requirement. So we went ahead with the final stage, and that's the last remaining step that we have before the EPA submission. And this is where we've had a little bit of a delay. 4 out of 5 of the active ingredients used on Advacil are not yet registered in the United States. Now, some people might say, well, why didn't you use the ones that were registered in the United States? Because it was difficult to be able to get those chemicals. We met a bit of resistance trying to get the chemicals, so we decided to go abroad to get those chemicals. Now, what we're doing is we're simplifying the registration process by proving the equivalence of the chemicals that we're using with those that are already registered and marketed in the United States. And although important progress has been made, we've met some delays. What you have to be able to do is show that the chemicals being used, so those nematicides, fungicides, and herbicides that are being used, plus their impurities, because within each ingredient, you've also got some impurities that are associated with them. So you have to identify those impurities as well. Once those are identified, we'll be able to prove the equivalence with the generics on the market. The lab has told us that they can do it. It's just that it's taking longer than we had anticipated. So we'll be working closely with them, and we will get those numbers out as quickly as possible and submit the EPA submission. I should mention as well that once that EPA submission is done, it could be a month, it could be 2 months, but what we're saying is it could take up to a year just to be able to manage expectations. So it could be short, it could be long, but people should think that it should take up to a year possibly. Okay, so that's where we stand with respect to the Advacil product right now as we speak. Now, jumping to the numbers a little bit closer, this gives you a track record of Imaflex over the past 4 years. What you have to be careful with sales is that about 60% of our raw material costs are resin prices. resin prices have fluctuated tremendously over the past number of years. We had 7 months of an uptick over the past year and a half or so. And then we had 7 months where they went down or flat. And then in March, as we had unrest on the global scale, we started to see their prices go up again. So they fluctuate up and down. And it means that when you look at revenues, you have to be careful for a company like Imaflex. It's better to look at things like poundage and that. But because what we do is we take the raw material costs, we add on our contribution. We do not have fixed contracts, which is a good thing for Imaflex. If we had fixed contracts and you sign that and you're in a down period for resin prices, well, as soon as those resin prices start going up, and we started to see that consecutively month after month in the past year and a half, then you're in a bit of a pickle because all of a sudden you've got this contract at a certain rate and you're not going to make your margins. What we do is we take the price of resin, we add on the contribution that we expect, and then we pass that along to the customer. If the customer gets a decrease, he wants that right away. For increases, there's about a 30-day time lag. So you do have that issue. It all gets worked out over time, but it can result in some momentary pressures. Now, what you do see here now on the farther right side, the gross margin, EBITDA, and net income is some fairly good numbers for the past 4 years. In 2020, it was really a transformational change for the business. We went up significantly, and that growth continued into 2021. As I mentioned, 17 cents per share of income in 21, 13 cents per share in 2020, and you see the huge increase in net income between 2019 and 2020. So some very nice increases. Now, why has that been happening? Well, there's about 2 or 3 things there. One, we've got the increased scale. So that reduces the impact of labor overhead costs on the business. We brought in new equipment, which allows us to basically generate revenues at a higher contribution margin than historical norms. And so that's been a benefit for us as well. And also we've been able to play in a bigger sandbox because what we've purchased is equipment that allows us to offer our customers more than just the plain vanilla, that allows us to offer them more barrier protection, for example, for meat packaging, etc. It brings in higher revenues. And also when you can do converting as well, your bag making, your printing, this all means additional revenue. So that's what's contributed to the additional profitability that we have been seeing, and we will continue to see through the equipment that we currently have and the equipment that we are buying. We're basically doubling the coax equipment that we have, as I mentioned earlier. Now, looking at the metrics a little bit further, in terms of return on equity, we had just under 18% return on equity in 2020, just under 19% return on equity in 2021. Net debt levels, as I mentioned to you, 1.1 million, actually cash positive if you remove the leases. A solid balance sheet. We're a cash generator. We have about $18 million of funds available to us if you include the 8.5 million of cash and the 9.5 million of our unused $12 million credit facility. If you're looking at working capital, we went up over 50% between 2020 and 2021, from 17 million or so up to 24.4 million. So really, we're in a very good sweet spot, we believe. Now we want to grow, but we want to make sure that we grow profitably and that we do the capital allocation in a conservative fashion so that we don't get ahead of our time, ourselves, I should say. So we're well positioned to grow the business, and we've got the financial flexibility to do just that. Looking at the next slide, this gives you the stock chart over the past year. We believe that we're trading at attractive levels for those people wanting to enter into the Imaflex story. We're 8 times earnings, 5 times EBITDA, 1.6 times book value. So we believe that we're trading, well, to be honest, we believe that we're trading at a point which is a bit low, but the market determines where we should be. Shares outstanding, about 52 million shares, and insider ownership, about 56%. It's fairly low liquidity. We have some good, strong insider ownership, and we have some good both institutional and retail investors who are very supportive of the company as well. They're patient investors. So just in closing, Imaflex, a recognized industry leader, serving attractive and growing multi-billion-dollar markets. We're profitable with a healthy capital structure. We're a cash generator, as I mentioned to you earlier. We believe that we're in the early stages of a multi-year growth cycle. The new equipment will bolster our scale, our profitability, and our capabilities. And on top of that, we've got Advacil, which represents a compelling business opportunity. So really a win-win with Advacil for Imaflex, for the customers, and for the environment. And that's it.
Perfect. Well, thank you, John. I want to remind everybody that's listening right now, if you've got any questions you'd like me to ask John, please use the chat function. And of course, we'll ask those questions for you. John, last year, a record year for you guys, really strong. But I did notice your gross margins were down a few percentage points. What affects your gross margins like that?
Yeah, well, what would affect the gross margins, I mentioned to you earlier, is the resin prices. So first of all, the base that you're working off of. So what we saw is we had resin prices coming down in 2020, then they started to go up in 2020 near the end, and they continued through a large part of 2021. So you're going to get a higher revenue base on that gross profit that you have, which reduces the gross margin itself. So that's really the key factor that drove that there.
Mm-hmm. And I imagine these resins they're petrochemical, so petroleum-based resins. Is that correct?
That's right. That's right.
Okay, yeah. So we'll see. Well, obviously, higher oil and gas prices are going to have an effect on the underlying product. But like you said, you pass through pricing to your customers, so you're not necessarily tied to that. But do you ever get any resistance? Like, mind you, these are products that basically have to be used. But is there any sort of pricing blowback?
Yeah, you can have a couple of things happen. First of all, as I mentioned, if there's a decrease in prices, the customer wants that immediately. They're not going to wait. They want it right away. If there's an increase in prices, the customer will not want to pay for that right away. So they want a 30-day lag. What they want to do is see our resin prices going to come back down again, in which case they say, hey, it's all washed. Too bad, we didn't catch it in time, but let's just come up with a new price. So if prices are going up, we usually have about a 30-day lag. In a rising pricing environment, that can hit you a little bit, but it all works out over time. The other thing that you have is we do work in a competitive industry. And if some of our customers decide that they want to go ahead and try to capture more business, they could play with the pricing. Now, it's going to hurt their margins, but we would have to decide at that point, do we want to try to match their prices, et cetera? And that's the question we'd have to do at that particular point in time. Yeah.
And I mean, do you guys carry a lot of inventory? Are you sort of at risk, or I guess it works both ways, but so many of these commodities now are very volatilely, the price is moving up and down so rapidly. How do you protect yourself in that environment?
Yeah, well, we have a buyer, and he'll if he does see opportunities to buy product at a good price, then he'll go out and do that. But we have on stock millions of pounds of inventory, and that will fluctuate. So you'll be basically making a mix. So you may buy something today, and then next month the product price will go up by 10 cents because of resin prices. So you're basically getting a double benefit. You bought something at 10 cents less, and it's gone up by 10 cents. So now you're getting a 20-cent benefit. But our pricing guy or our purchasing guy would monitor the market very carefully. You have to look at a few factors. One, actually getting resin can be difficult during the supply chain constraints that we have right now. So you want to make sure that you have enough product in hand that you can meet the demand of your clients. We've managed that very well over the past year. We have had some issues where there's been shortages, but we've been able to manage that, and we've been able to manage the pricing on top of that as well. Yeah. It's a complex process, but it's one that we can do, and we've been doing for decades now. So it's not new.
Right. You mentioned the biodegradable or compostable product. I'm interested to sort of know how I would think it's more in demand. That's kind of what I'm getting at. We keep hearing about everything as far as, going green and the demand for this, but you're telling us that, pricing is really what's affecting the decisions right now, not so much, the move to greener products.
Well, pricing has been an issue for us. Remember what we're packaging as well. It's a bit different. If you look at, food products that are using like plates and straws and everything, that there's been a real move towards that more than, say, on the packaging side. What you have as well on top of that, I didn't mention, is some people might worry, for example, if you package a meat product in a compostable plastic, if you package frozen goods in a compostable plastic, you want to make sure that it has a shelf life where that product does not start to break down at a certain point. Also, if you're using it for bread products, it makes it somewhat more difficult too sometimes, because you've got moisture barriers in the bread. You put it into a plastic bag that is warm. When I say warm, the bread itself is warm. So there's different environments that have to be able to manage with it. And that can be a worry to some people, because if they take it on and it doesn't work, they could find themselves in a bit of a loss situation with the customer. The other thing, yes, definitely, is the cost component, because it does cost more. And if you're packaging, basically we sell a lot of our product. Most of our product right now is sold to converters. So converters will take our film and then they'll make that end product for the customer, for the company making vegetable products, fruit products, etc. So he has to turn around and say to that customer, okay, well, now you're going to be paying X cents more per bag because it's a compostable product. Now, if that customer is willing to do it, he'll go ahead and buy the product from that converter. If not, then he's going to put up some resistance.
Yeah.
It's like buying an electric car. I mean, are you willing to spend the extra funds to buy an electric car? I mean, it has benefits over time, but are you willing to do it or not?
Yeah. No, so again, clearly you had a great year last year, but what challenges do you see going forward? What challenges are you facing right now?
Well, right now, I mean, there's a few things. Obviously, the resin pricing environment, we have to make sure that we can manage well within that environment. We have to make sure that we can continue to source product that we need to be able to meet the demands of our customers. In addition, we work in a very competitive environment, so prices are going up and down. You've got people that are looking to get new customers, and so you have to work with all of these fundamentals in order to be able to meet the demands of the customer and do it in a profitable manner. But that said, we've been doing it for like I said, decades now, and it's not new. It's a pretty it's a complex business, but it's a simple business at the same time. Yeah.
Now, you're a microcap company listed in Canada. You don't necessarily have to go and raise money from sort of the investment bankers here. How are you getting your story out? Like, we're curious to sort of understand almost the IR environment out there. What are you guys doing to get your story out? Right.
Yeah, well, we've been working with a number of investor relations services to get the story out there. We believe right now with the liquidity levels, it's more of a retail story. Institutional investors, I had a call, I was telling Trevor just recently, had a call from somebody looking to buy 500,000 shares about a couple weeks ago. And they're having difficulty because of the liquidity issue. So we've been concentrating more on the retail side. We have done a number of institutional roadshows as well with Beacon Securities, who covers us. They've been doing a good job and getting us out there. We've also been told by institutional investors, should we do a raise at some point in time, they'd be interested in speaking. So it's difficult from that perspective. It is a retail story. It's one that it requires just to get out there and work with these various groups. But it is difficult to get out and get the story across to the retail audience.
I mean, we're hearing that from a number of CEOs. It's in this environment right now, small is not beautiful.
No, that's it. I mean, the market right now is not working in our favor for small cap, period.
Yeah, exactly. Yeah. John, what what sort of what catalysts or metrics should we really pay attention to sort of validate that you guys are executing your business?
Yeah. Well, I think what you want to do first of all is we've indicated in our press release that we expect a couple of things. So Q1, we said that we want to have increased poundage over Q4 of last year. And so you want to be able to see that we've got growth going into Q1. You want to be able to see that we've got the equipment coming in on time, because that's going to bring a lot of leverage for the business going forward. You also want to look at Advacil. Do we complete the independent lab analysis to show the equivalence with generics on the market? Do we get that EPA package in there? And the last thing would really be, again, as I mentioned, are we producing profitability numbers that are at higher than historical norms?
Perfect. I mean, we covered a fair bit here, but is there any other key message or is there a parting message you want to give everybody here to really understand what the business is all about and what it looks like going forward?
Right. Yeah, no, I think I've discussed really everything at this point. I'd like to thank you guys, obviously, and the listeners for joining today, and also just to encourage them to follow the story. I think we've got some good things happening here. I encourage you to follow the story. If you're interested, hopefully we'll have you as one of our shareholders going forward.
Fantastic. Well, that's great. Well, we've been speaking with John Ripplinger, Imaflex Incorporated. John, thanks for joining us today. And listen, we look forward to catching up with you guys in the near future.
Thanks for having us. Enjoy your day.